Hi everyone, welcome to my channel. Thanks for tuning in to All Things Accounting. Today's topic is going to be an elaboration on assets. In one of the other tutorials that I held, we went through cash, accounts receivable, and notes receivable. So today what I want to go through is a continuation and cover some more assets in terms of its order of liquidity as well. So stay tuned, and I hope that you enjoyed today's tutorial, and we'll get through this together. Okay, so assets. Again, just a review in case some of you may not have seen my first video on assets on cash, accounts receivable, notes receivable. Just to review some of the terminology or the criteria for assets. It has to be owned by the individual or the business. It has to have current and or future benefit, meaning that it has to be able to generate income, help you generate income to sustain your business. And lastly, one of the biggest things again is that the assets are recorded by debits. Short form is DR. Okay. Now, last time we had cash, accounts receivable, notes receivable. So today we're going to elaborate and examine what is meant by prepaids. So you could have prepaid supplies, different prepaid, you could have prepaid insurance. So we normally call these prepaid expenses. So normally what does that mean? Prepaid expenses are payments for assets. Again, they're payments, they're prepaid, and they're payments for assets that will be used in the near future. So again, for example, if you had prepaid supplies, I buy it today, they are an asset. I may not use it right now, for example, markers or pens or pencils for my office, but as I use it up, then they become an expense. So that comes down to the matching principle under GAAP, generally accepted accounting principles, where you match the revenue with the expenses, but that's a whole topic on its own. So again, prepaid expenses are such things that, again, supplies, office supplies, insurance, and they are payments for assets that can be used in the future to generate your income for your business. Another thing could be, so prepaid rent is another example. So supplies could be prepaid supplies. Okay, so those are just some examples there. Also insurance, if we want to include that, insurance. Now, if for prepaid expenses, if you're buying supplies that you know in the particular accounting period that you will use it all up, then you could you don't really need to set that up as an asset. You could just expense it all because you're going to be using it in the current accounting period anyways. Okay. So next, we would say, let's say we have equipment. We run a business. We have certain equipment that we're going to be utilizing. Okay. Now these could be such things as computers, printers, other such things as desks and chairs, cash registers, things that would help you generate income during your business operations. Okay. Another thing could be buildings. For example, if you're going to open up your own ice cream shop, well, you're going to need a building, either rent it out or construct it yourself. But in this case, if for the case of the balance sheet, then it's owned. It's owned, again, just like the definition of any other assets. And it's for the purpose of providing space for a store or an office to run your business out of, or office, or even a factory. For example, going back to the example that I alluded to before, if you're running an ice cream, then you might have a building where you're going to provide the ice cream, so you have to make it somehow, so it could be a factory as well. Okay. Now, lastly, what we're going to cover here is land. Now, land, normally if you're going to buy a building, sometimes you would buy the land with it, right? It would make sense. But for usefulness of financial information, for financial reporting purposes, what we would normally do is break out the land and the building. In some cities, it could be the case where by the building, you may not even own the land. So you might not have the legal ownership to that, okay? But in this case, let's just assume that it's owned by the business, because again, by definition of assets, it has to be owned as well by the business. Okay, and here again, the cost is separated out of the land from the building, just so that we can see how things are presented for better presentation purposes as well. So today it's a little more comprehensive, so I hope this helps you understand a bit more of the different classification of assets, and I hope you enjoyed this, and please again stay tuned for some of my other tutorials, and I hope to join you then.